The current situation in Cyprus, it's been 2 weeks now that we've been talking about this situation. So what is that telling you now?
Well, I think, you're right that it's been 2 weeks that we've been talking about Cyprus, but it's been, maybe 4 or 5 years that we've been talking about this same problem, because Cyprus is exactly the same problem as, what we saw in Ireland, what we've seen in Portugal, Spain, Italy, and Greece in particular. Right. Absolutely. The Greece problem's been going on ever since 2008. So it's really the same issue that we've got, different currencies, different countries rather, with different economies, all squeezed into the same currency, and it just doesn't work for them. And a lot of people are getting really worried about the fact that the resolution in Cyprus is doing a couple of really disturbing things. The first worry is that Cyprus is the only place where bank depositors, have had to pay for the bank bailout in the Eurozone so far. Now, you could argue that, that's the rules, and there's a €100,000 guaranteed deposit across the Eurozone. And that's obviously what the ECB and what the core countries are arguing. But, the problem is they haven't really used those rules in their own backyard. So when we've seen banking problems in other countries, there's been a different approach made. We've seen depositors protected, we've seen bondholders protected, we've seen other banks protected, and we've seen all the bailouts that have allowed that to happen. Suddenly we get to Cyprus, and a very different scenario is happening, where the depositors are now having to pay for it. And if you're very cynical, you'd look at it and you'd say, well, if Ireland, for instance, had been hurt at the time, then it would have been the German banks and the core banks who would have been the ones who'd suffered. So that's why everything there was protected. In Cyprus, it's actually there's a lot of Cypriots, but there's also a lot of foreign investors. Everybody keeps talking about the Eastern European money and the Russian money that's in there. Exactly. So, these guys are outside the ECB. So it almost seems like the ECB have now decided that actually all the rules have gone out of the window, and every single case that comes up, maybe they're going to decide who's going to pay for that one, and it's not going to be consistent. And markets don't like that, and depositors don't like that, and you can understand why. If we have, whenever you see a game of football and a referee makes a different decision for both sides, with one guy he gives a red card, but with the other side he says never mind, play on, and it's the same foul. It's a little bit like that now with the ECB, that they're using different rules according to which jurisdiction it is and who's going to be affected from it. So that's a real worry, and that's worrying a lot of people. And I think the second thing is that we've got a really dangerous situation where we now have these capital controls in Cyprus, where you can only get, say, €300, which is about 12,000 baht. I think that's the maximum you can get out of a bank. And
maybe they want to avoid the bank runs.
They're trying to, absolutely. And that's the idea of it. They want to avoid bank runs. And they also are preventing people taking, capital out of Cyprus. You can only take €1,000, so 40,000 baht, I guess, something like that. That's all you can take out of Cyprus if you're leaving. If you try and leave with more currency than that, that's now an offence and you can be arrested. And we understand, say they're trying to stop bank runs for sure, but that's been a typical response of governments for many, many years to try to prevent bank runs. And when it's your own domestic currency, to some extent you can do that. It's still generally not very successful, because all it does is really build up the pressure and make it all much, much worse. But when it's your own currency, you can maybe try and implement that kind of policy. The problem with Cyprus is that Cyprus is part of a common currency. It's part of the Eurozone, exactly. So, we have this situation where all of a sudden there are different rules for what you can do with euros in Cyprus compared to what you can do with euros anywhere else in the Eurozone. And that means that Cypriot euros, any euros that are actually inside Cyprus, are actually worth less now than euros that are outside Cyprus. And one of the key tests of a currency is something that's called fungibility, i.e., is a baht worth the same? Can I buy the same value for a baht in Bangkok as I can in Pattaya, as I can in Phuket? And yes, you can. Is the answer. I mean, you get local price differences, but the baht itself is worth the same. But with a common currency zone, it should be the same. That you should have the same rules applying to euros that you have in Cyprus as opposed to euros that you have in Berlin, say. But in Cyprus, people are losing up to 40% of the money they put in the bank, and they're being told they can't go and transport that money around, they can't get it out of the bank, they can't leave Cyprus with it. And so it's become very much a second-class euro, and a lot of people are saying that, that's the end of the euro. There's no way back. The minute you do that to a currency, there's no way back from that. It's very difficult to see how they're going to manage this
So
situation.
you're raising the questions of the long-term survival of euro.
Correct, yeah. I mean, it's been a question for a long time, but this is maybe, if we see it as being a very big brick wall, then, these are some very, very important bricks that have been knocked out of the wall now. There are holes appearing in the euro, and we were always worried about how well it was going to survive and how long it was going to survive. But these are the real first signs of serious damage. And you've got to question, just how is the euro going to look in, not even in a year or 2 years, but maybe in a month or two. This is a very, very serious step.